Trade tensions brought on by increased tariffs between the U.S. and other countries are leading to uncertainty regarding the economy. The stock market has seen a volatile couple of weeks as the president announced he will increase tariffs on Canada, Mexico, and China. In return, retaliatory tariffs have been announced for the United States. Due to the uncertainty of the economy, the Federal Reserve announced yesterday that it will keep interest rates steady for the time being, leading to more uncertainty about just how strong the economy is. Joining us now is Jeffrey Campbell, professor of economics at the University of Notre Dame. Dr. Campbell, thank you for joining us. Let's go to what President Trump said, posting on Truth Social. He said he had a message for the Federal Reserve. He said the Fed would be much better off cutting rates as U.S. tariffs start to transition or ease their way into the economy. Is the president right? Would the Fed be better off cutting rates?
Here, I have to respectfully disagree with President Trump. I believe that the Fed's rates are designed to meet its two goals, what's called the dual mandate of stable prices and maximum sustainable employment. And stable prices means inflation at about 2%, and maximum sustainable employment means, at the current junction, unemployment right about where it is at 4.1%. Currently, inflation is running above 2%, about 2.7, 2.6%. And so that calls for tighter rates than normal, not looser rates. I argued back in September that the Fed was aiming to get to lower rates too quickly. Fortunately, from my perspective, they've stepped back from that, and they've lowered rates at about the rate that I would think is appropriate given the macroeconomic conditions. I don't see the tariffs as substantially changing macroeconomic conditions, and certainly not in a way that would call for actually lower rates.
Well, in the announcement yesterday, Federal Reserve Chair Jerome Powell explicitly mentioned the tariffs. Let's take a listen.
It is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs. The answer is clearly some of it. A good part of it is coming from tariffs.
So one question might be, how long will it be before the effects of tariffs on inflation will be known?
It could be quite a long time. I have to disagree with what Chair Powell just said there. Again, respectfully, we don't necessarily see very much pass-through for tariffs, even over very long periods of time. We didn't see a lot of pass-through from lower tariffs when China acceded to the World Trade Organization. And so for that reason, I don't see a lot of reason that we're going to see much pass-through from tariffs going up in the near future. So I think that my baseline forecast is that the manufacturers will absorb the tariff hikes in their markups, and consumers won't see very much change.
Well, let me ask you this. Some are concerned a recession is on the horizon. Your thoughts, are we close to a recession?
No, I don't think so at all. I can understand where that's coming from, because a lot of the headlines are talking about things that we as economics professors teach are economically damaging. We typically teach that that tariffs are damaging, that uncertainty is damaging. That's all very good, but the headlines don't take into account the quantitative significance of what's going on. And personally, I don't see what's going on now as very quantitatively significant. So there's no real indication in the incoming data that we're heading into a recession. The Fed's own survey of summary of economic projections doesn't say that we're going into a projection. I agree with them on or going into a recession. I agree with them on that. I think that's probably overblown.
Well, Jeffrey Campbell from the University of Notre Dame, thank you for sharing your perspectives.
Thank you, Mark.